I've got another disability and special needs planning case for you from real clients. Here's the problem. We have a client couple in their early 50s. They have multiple children, two of whom have disabilities. They want to make sure that their surviving spouse and their children will be financially protected in the event they pass away. A couple years ago, they bought life insurance policies from a friend who's no longer in the business, and they didn't fully understand how those policies would work, and they're now wondering if these are the right policies for them or if they should switch to something better. Here are a couple of the facts. Spouse 1 pays $1,200 a month to an indexed universal life insurance policy, an IUL, with a death benefit of around $850,000 per year. Through analysis, we found out that spouse 1 needs about $1.1 million of additional coverage. Spouse number 2 pays about $200 a month to an indexed universal life policy with a death benefit of about $400,000. Through analysis, we found she needs about $1.2 million of additional coverage. Now, this client couple make a pretty good income. They're business owners, but they have almost no retirement savings. And after reviewing these IUL policies, we found a bunch of pretty major drawbacks. Very high fees, they're expected to lapse or run out of money before they pass away. There's very little downside protection because it's being invested in the markets. Here's the solution we came up with. This IUL policy could make sense if, number 1, they had enough pure life insurance coverage, which they don't, and number 2, if they had enough retirement savings, which they don't. So we decided to surrender the policies and instead replace them with much more cost-effective 15-year term life insurance policies. Spouse number 1 got a term life policy of $2 million paying $360 per month. Spouse number 2 received a $1.2 million term life policy paying $160 per month. In total, the couple is saving $800 per month, which they're taking and putting directly into their retirement accounts. And they added an additional $1 million worth of coverage each. This additional coverage is going to make sure that the spouse and the surviving children are totally protected and that the two children with disabilities would have enough funding to fund their special needs trusts if needed.